Hey YouTube. So it's been a while, but with a little bit of excitement in GME, I figured I'd come on here and do a quick little video. What I'm most famous for, I guess, is failing to predict the last GME Meltup, in which I was calling for a bullish weekly trigger, monthly trigger crossover to initiate a Meltup to triple digits for GME. And once we did have that bullish crossover, we actually did get a pretty nice upswing for GME, but we can see bearish liquidity here, brought price down. And then we even had another really sharp spike up to 35. But again, while I expected both of these spikes to go a whole lot further, unfortunately, they were cut short and price collapsed each time. And even here, this setup looked extremely promising for one last hurrah and one last chance at potentially getting that melt up, but again, unfortunately, was just brought right back down. Now, after diving into the setup for a while and adding the liquidity indicator from deep dive stocks, I realized it was a lot easier to kind of see how things were moving. So to put it simple, green candles means liquidity in the stock, like the total gamma and everything behind options is bullish, pushing the direction of the stock price to the upside, and red candles means the totality of liquidity is bearish and the likely direction is down. Now, if we zoom up here, well, first of all, we can see that on the 4-hour liquidity has been a really good precursor for price having some big upside moves. So we had that flip to bullish here, which was followed by a big move. Then liquidity turned bearish, and once it turned bullish again, another nice move. Liquidity turned bearish. Once the candles turned green again, another nice move. So again here, and now the candles have turned green again. Which brings us to a very pivotal point, because we can see the weekly trigger now crossing back down below the monthly trigger. And so in order for things to turn bullish on the macro, we would have to see price break above these two triggers. So I narrowed it down a little bit just to give a little better view. We have the daily trigger, which price is above and is now acting as support. And we have the weekly and monthly triggers here, which are acting as resistance. And we can see how liquidity was mostly bearish as price was going down, and then liquidity started to turn a little bit bullish here. And once it printed some consecutive bullish candles, we can see a really nice rise from about, let's say, 20 or so, like a nice 16% move to the upside for GME. And now, essentially, it's trading in this really close range where the daily trigger is going to act supportive on dips, and the weekly and the monthly trigger are going to act as resistance. And you can see price got all the way to the tippy top here before rejecting. Now, the obvious question here is that it looks like the weekly trigger has crossed below the monthly trigger. Price looks like it's rejecting a bit. Is this going to be the end of the move? And the answer to that is I don't think so. And the reason for that is I'm not sure if you guys have seen on the Deep Alpha Alerts account, the Twitter account, but they've been posting this interesting VOX graph, which you can see here. And VOX liquidity obviously measures liquidity in the ticker. What VOX measures is the total stock pressure. So when VOX is in the bearish zone, it means that the total stock pressure is pushing the stock down. Like we can see VOX move into the bearish zone here, and the stock took a nice little tumble. And when VOX goes into the bullish zone, like we see here, price moves to the upside because the pressure, the total pressure behind the price movement is pushing it upwards. Now, in the entire history of GME's trading, VOX has only spiked this deep into the bearish zone 3 times. Now, the first time it spiked this deep into the bearish zone, VOX recovered into the bullish zone, and shortly afterward, we had that really big January 2021 squeeze. The next time it spiked into the bearish zone this deep was back in March of 2024, and we can see that VOX took that deep dive into the bearish zone, and once it moved into the bullish zone, we had that whole April-May squeeze that everybody remembers about last year. And now GME has made its way deep into the bearish zone one more time and has now moved back into the bullish zone. So when I look at a chart like this, it tells me that there's potential here for GME to experience a similar type move like we saw in January 2021 and we saw in April 2024. And the logic behind it is really think about it like a rubber band. So price can become bearish and become bullish and become bearish and become bullish. But when things get stretched so far to the downside and VOX hits these really deep levels in the bearish zone, it's almost like a rubber band where you can't push it down this deep without severe consequences. And the consequences are that once VOX moves back into the bullish zone, we see these extraordinary rises to the upside. Again, here, and potentially here. So for me, taking this all into context together, I do believe that if GME can break above the weekly and the monthly triggers here, it does open the doors for another big upside squeeze for GME. Now, we can also see here that even when GME was trading bearishly long ago, if I go on the daily time frame for a second, so GME started to turn bullish back in early April, but it was only once it broke above the weekly and then right afterwards the monthly triggers where the severe acceleration started. So, for example, way back in January 2021, we see that break above the weekly trigger, acceleration to the monthly trigger, and then once price broke the monthly trigger, that's when things got really juicy and we saw the January 2021 squeeze. And then back here, price was trading below the triggers, broke above the weekly trigger, started to accelerate, and then once it broke above the monthly trigger, it actually gapped above it, but that's when the massive price action actually began. So coming back to GME here, with price right below the weekly and the monthly triggers, what the triggers are strictly acceleration levels. When price breaks above a trigger, it accelerates to the upside, and when price breaks below a trigger, it accelerates to the downside, especially when liquidity matches. So like we can see here, price broke below the weekly and monthly triggers, liquidity turned bearish, and then we had a big swing downward from 23 to 20 or so. So taking it all into context, if GME can break above these weekly and monthly triggers, and especially because they're so tight together, it should cause extreme upside acceleration. And so for me right now, just watching this chart, I think dips down to the 2190 range are a really good dip buying opportunity, as the daily trigger is expected to act as support. And if price were to break below the daily trigger, that can easily be a stop out for not too bad of a loss. But if price breaks above this weekly and the monthly trigger, that could be potential for some serious upside. So watching closely, and we'll see how this develops over the next coming days. Good luck in your trading, everyone.